One of the best predictors of the 2022 stock market crash is at it again. Morgan Stanley's Mike Wilson is claiming that there's too much optimism in markets right now. But he's not the only one. Barry Bannister is also saying that EPS price growth expectations are too high. We've got the charts in today's video, along with what just happened on the market. Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss stocks, commodities, and cryptos. We'll be taking a look at a deep dive of the S&P 500 at its biggest resistance faced yet, the Russell 2000 and how it's placed in island reversal. Are there more shorts to come? And of course, what's going on with yields? They've spiked again, even though nothing's really changed in policy over the last 24 hours. What happens if we get past 5.1%, and should we be concerned? That and more coming up today. Well, welcome back, everybody, to the Daily Show where we talk about markets around the world, including macro lead indicators and the hottest charts, which are coming up later. It was a sea of red across the board here when we take a look at the last 24 hours, although there were some highlights. Tesla rebounded its big loss on Friday, thanks to its Model 3 announcement of the new car. And of course, Microsoft and Oracle put in some decent days. AAPL was down over 1% at one point as well, and then it made a recovery. We'll look at that later on the charts. But what is Morgan Stanley's Mike Wilson talking about when he says that this current price action is not supportive of expected growth reacceleration? Well, a lot of us don't use these kind of combo codes, but it's really important to think about things as ratio. He's got here regional banks versus the S&P 500. That's not accelerating. It's certainly decreasing over the month of August. We've also got things like small caps versus S&P 500 underperforming. Russell 2000 certainly in focus there, and equal weight versus market cap weight of S&P 500 is also underperforming. So it's a few companies that are still doing well. It's not the underlying that's improving. And what we saw over the months of June and July was maybe a recovering market. Now that seems to have completely gone out the window, and it could mark a bad September. We'll look at the stats for September from this year versus, of course, other years in the past. But let's just talk about S&P 500 operating EPS. So you can see here that Barry Bannister was talking about his expectations of EPS price growth versus the street. The street at the moment expects a 228 on average, and it seems like if they're going to get that, we're going to new highs. His expectation, 213, and that he doesn't really think that we're going to be able to get that much higher. If you actually take a look at the 30-year EPS price trend growth, you'll notice that really what changed everything here was that bazooka of massive stimulus that came through in 2020. It totally took us off trend. So for the Fed to kind of achieve their goal, in some ways, it would be good to come back to the 30-year EPS trend growth. It's a great way of looking at it and certainly an interesting chart. Let's now talk about whether we see any weakness, though, in markets yet. This is, of course, our bullish percent index. We talked about how even the first rally usually comes with these really strong candles. And the main reason why that is because when you're in a sell-off, you generally have that strong V-shaped rally, which is based on a capitulatory event, usually super selling, such as what we saw in March, followed by this significant rally off the bottom of the lows. What we've seen this time is more like this, which is a rally followed by some selling that could make a doubling bottom. This tends to happen as well in pre-election years. We've talked about how we get August sells, and then we usually get a September sell that happens near the end of the month. So let's take a look at how that watches or how that usually comes through. Do we need to be worried if we're a bull in the market? Well, historically, no. In years such as this, where we've had such strong price acceleration through January into August, we tend to actually have a 100% strike record by the end of the year. In fact, if you were to buy and hold, usually you'll be up, but not as much percentage, of course, as the start. The key, though, is going to be somewhere around what we call the OPEX week, which is the third week options expiration. The post week to that is quite negative. The less people that talk about it, probably the better. And yes, of course, we are talking about it on this show, but maybe we're a little secluded inside of the YouTube platform. Overall, here we have a very, very strong statistic that says that the back of September tends to be quite weak. And we shared this in our weekend video as well. So make sure to subscribe if you're interested in this type of data and content. You can see here post-Labor Day weeks tend to be a lot of 50-50, follow the price action. Pre-OPEX weeks tend to be a lot more positive. So in our Monday, or in this case Tuesday live stream, we talked about how we might see weakness this week, possibly strength next week. And then the week after that, we're looking for weakness again. Only 17 positive, 33 down. And the last week of the month tends to be, again, a bit of a coin flip. Follow the price action in that case. So with all of this taken into consideration, Should we be investing right now? Should we be trading right now? And what actually should we be doing in markets? Well, if you're an investor, you're generally wanting to buy 25-year average forward PEs if you're especially a dollar cost average person or somebody that's looking at buying indices. At the moment, we're trading about 18.8 times forward PE, so maybe a little bit too expensive still for a long-term investment, but that's up to you. One standard deviation each way. If you're on the bottom, of course, exceptionally good, and if you're on the top, exceptionally bad. I shared this chart over on our Twitter or x.com or whatever it's called now. And basically, we have the S&P 500 index, and you can see here that we can see all the forward PEs over time. When we tend to get into these 19s and 20s, we usually are a little bit expensive based on previous history. When we get into the 15s or 16s, usually we're pretty good to go. So something to keep in mind if you are somebody that is patient, and very patient indeed, especially when it comes to indices. What direction does everybody think the markets are going in? Well, we don't have our updated chart this week yet, but we will get it on our Friday video. We know that there were a little bit too many bears over the previous 2 weeks, and that helped to support the market. If we get a reading, which is taken usually from the Tuesday, so we'll actually know the reading as a Friday, but it's taken from the Tuesday. If we get a nice re-bull reading, which I assume we will, let's put our comments description. Let's do some guesses here. I'm going to go with it's probably about a 36% bull read as of Tuesday. I reckon there's going to be a lot more bullish than action, and this goes back under 30, then generally there could be more selling to come. Just remember, it's not a guarantee or anything, but it is often what does happen. We're also on yield watch once again. Yes, this whole thing going on with yields at the moment, we're seeing a spike across the US 2 and 10-year coming back through. We know that each time the yields made new highs previously, we saw Silicon Valley Bank crisis, we saw the gilt crisis, and we'll also have a special on central bank liquidity over the next couple of days. So stick around for that, because I believe central bank liquidity is starting to weaken across the board, and not just from the old measures that we use, but also the new measures and the new schemes that were sneakily put in place around March to support the regional banks. We're starting to see them fade, and that could mean that there could be a bit of forced selling very, very soon. So what about positioning? Did we see any dark pool liquidity? Did we see any large trades? We saw a decent trade coming through for, of course, here the Ultra VIX. So could it be that we're finally about to see a large spike in volatility? Well, stick around. We'll have the VVIX in a minute, which is the volatility of the volatility, and it looks like there's a spike there. We also know that bear funds such as the Direxon SPDN at the moment is putting in a couple of large trades. I have to assume they're bearish positions because they're looking at, of course, profiting off. And I've also seen this on other S&P 500 funds as well. Large transactions going through right here, right now. And it could be that this is selling into a bit of a turn event. It also could be an accumulation or profit taking. I don't know yet, but I'm going to assume it's the selling side because we're at that key resistance. Let's also move over to Tesla. Of course, this happened before the Friday sell. The Friday sell happened. Then we saw the pickup. We trade right around a very critical zone. Watch the 61.8 and a few other levels that we'll bring on the charts very, very soon. Let's move over to the wonderful world of options and what's been happening there. Have we got any random trades? Well, we have one of my old favorites, which is Zoom. So Zoom got 2.2% gain on it, traded 2.21 times average 90-day volume with a lot of calls coming through. Could be worth looking at the price action on that particular stock. And then we saw some large trades coming through from Broadcom, which continues to get tons of trades on it. I'm pretty bearish on Broadcom. I think it's looking like there's a lot of selling or forced selling on that one. And still a lot of trades coming in for the iShares Silver Trust. Everybody's on board the silver at the moment, but the price action was bad for that, 2.6% down. In terms of calls to puts, we saw 54% calls and 46% puts on very low volume overall, 31 versus a normal 40. So certainly a bit of a lackluster day after the long weekend. In terms of rotation, nothing much going on here. Energy was the best, thanks to, of course, the cuts across the board in barrels. And then we saw just mostly everything else was negative. Defensives did not do very well. Nothing really was doing super well on the session. And you can see here the last 5 days, again, the market's not really positioning itself in a way that makes you think, oh, a big crash is coming. Usually you'd have healthcare, staples, gold, utilities. Those types of ones would be doing the best, not doing the worst. So we're looking for those to spike up if we do start to see selling. This stage, technology, semiconductors, And actually inflation-based plays such as energy and metals, which we've been talking a lot about metals, are doing the best. And it could also be a bottom for solar as well, which will be something that we'll have to move forward and start talking about soon. US 2-year versus 10-year, as we know, when it uninverts, we need to be concerned. And at the moment, soft landing searches on the internet are out of control. So everybody's searching for soft landing. It's no recession. No one even likes the word recession. Recession's terrible. Just remember, when it goes under 1%, that's when you should be like sad-faced and a little bit scared. At this point, well, we don't need to be. Check out our Monday live stream or Tuesday live stream this week as well over on our YouTube channel, because we did talk about this at some detail. Treasuries, what's going on in the US 10-year? Well, the US 10-year is getting tons and tons of pressure. And a lot of this has to do with the record bond auctions that we're seeing going on. I've talked a little bit about how I still think Treasuries and TLT is going down to 88.90, and I still think that is the way. So at this stage, we've got no change of trend. A lot of people have buys here. I mean, a lot of retail too. And I think that this is going to get flushed. So there's more chance than ever before that probably the market's going to make a new low here. And they're getting really, really good. I mean, Treasuries, I've never seen them so good in my 15 years doing this stuff. So they are getting exceptionally good, but at the same time, everyone's trading them long, and I could still see some flashes appear. What about the VVIX, the volatility of the volatility? Well, we saw the VIX up, but look at the turn here. All of a sudden, bang, volatility is coming back. And we've talked about how this usually was showing us that maybe the low was in. We'll be watching the VVIX very closely. Make sure to chuck it on your charts and have this at your service. And of course, we also want to be looking at percentage of stocks above the 20-day average. Well, it's just done a turn. And, you know, is it too little too late? Usually when you get these kind of rallies here in 20-day moving averages, you want to see a quick rally followed by a relatively quick sell-off. I think the next 24 to 48 hours are going to show us a lot about the markets. But yes, percentage of stocks above the 20-day certainly moved down. And if we look at the 50-day, we can see here that's getting closer and closer to that 30 level, which I'd like to see capitulation. You know, usually when you put a low in, you see like this really brutal sell-off followed by a bit of a V, followed by something like that. We just have not had that type of thing during this recent sell-off in August. The skew got crushed back down. That's good for bears, but nothing really to note of. And of course, we're looking on metals at the moment. The metals markets continue to tell us a different story to what the media is telling us. The media says, wow, China's going down, everything's terrible. But at the same time, iron ore price is holding strong, copper's holding relatively strong, and we're seeing the price action through metals. And a lot of you did report that you've been in metals, uranium, and other stocks trades like that, and they're doing pretty well. Yeah, it's completely different to what we hear, and hopefully that's some value that you get from this channel. So make sure to subscribe, because of course we talk about it. It's the price action that's the key. That's what we want to be looking at. Here, of course, is the US dollar. It looks like it's going towards 105.60. A lot of people can't explain why is this happening. It's not like there's any change in policy. A lot of it has to do with other central banks. People such as the RBA and soon Bank of Canada, they've been basically announcing that they're not doing rate hikes anymore. So comparison, some of these may have been expectations of doing rate hikes. Well, I'd rather own US dollars where there is potentially a chance that at least there is a rate hike still to come in comparison to some of these other central banks that seem too scared to do it. So I think that's a huge part of it. Plus, of course, the consensus at the moment is people trying to short US dollars. And when we looked at that weekly, we knew that this thing was going to keep going. I mean, that was a huge bullish wick rejection. Unfortunately, even though this was a great bearish area, it looks like we're going towards 105.16. Gold fared pretty well considering how strong the US dollar was, but it was down. And it generally doesn't trade that well. Even though I'm bullish gold and I like it as an investment from certain areas, it usually doesn't trade super well over the next couple of months. It tends to trade a lot better coming into November and December. But GDX did come down to a fair level here, 28.50 achieved. If it's going to buy, you'd think of somewhere in here is where you're going to see gold stocks go up. Gold stocks and gold can trade totally differently. So just remember, that's an important point. But yeah, very key level here. We'll be watching GDX over the next 24 hours. Let's move over to US oil. US oil put in a nice little bounce there, thanks to, of course, a whole bunch of news about what we ended up seeing, which was a bunch of barrel cuts. It does look like it's pressing towards 90 and 92 a barrel. So somewhere up here could be the resistance. I'm not going to bet against it at this stage. The sell that was possibly below this 82.41 never eventuated, as we talked about. And once we saw that daily close, which was right here, we were pretty clear that it was going to go for a momentum shift, and it basically kept pricing in new higher highs and higher lows. AAPL, now this was an interesting one, came in over 1% down, then just kind of rallied and held itself. I'm wondering whether it's going to hold until the iPhone announcement. Maybe that's what's going on. I think that's around 8 days away, maybe less. You can go check it out, macrumors.com or something like that. But in this case, yes, we have a 61.8 retracement. We are sitting on a resistance here, which is pretty key. And of course, we're looking for Apple to see whether it finds weakness. Look at Tesla. Very strong action off the buy the dip kind of idea. Still think that this is very possible here. And we did get a massive trade in there. So even with the positive catalyst news, this all in this green box is where bears will sit. So if we end up making a new high, maybe a 61.8, again, bears could sit there, press it back down. And I think there's a lot to not like about this zone as a bull. We're back to where that heavy big trade came through, and everything in here is heavily traded. So I do think that Tesla still finds itself as a bit of a resistance. If you're a bull on Tesla, once you get through here, probably smiley face. And at the same time, that's going to be the same thing as the market. If we get like through a 45.50 on the S&P, it's going to be a huge deal. Semiconductors still at resistance, no move there on the last 24 hours. And just to kind of prove a point, I guess here you can see that BHP, which is an iron ore stock, or Vale, have both been doing quite well in recent trade days. So it just shows you there are other sectors of the market that are doing quite well. And we've discussed these on and off a few times on the show. And of course, I've done this in the private community as well. Links in the description down below if you're interested. CQQQ continues to hold its base. It's down 2%, which is the Chinese market. I do think there's some kind of weird policy shift thing that they're doing at 38 for the CQQQ and for other stocks. And it still looks like, to me, September into October could be a positive time. If we look at Australian market, the ASX 200, it's not really positioning in a way that you would think is positive. Most traded zone hit, achieved. We know this is a resistance area. We know this is a fib. We know this is everything else. I'm not loving it. If we do close above now, we've got our kind of level. So if we close above something like a 73.50, I do think that at that stage we could be going to a new high, and that'll be really spurned on by energy stocks, metal stocks going ballistic. And really the only way that's going to happen is probably some kind of stimulus from China. We don't know if that's going to happen just yet. German market, weakness off that supply, continues to kind of find weakness there in its overall, what we kind of suspect is distribution. So at this stage, a lot at stake here for the German market. US 2000, beautiful trade here. A few of you guys found this one. So a lot of people in the private stream, the public stream actually, for our Tuesday open, we ended up getting a couple of questions coming in. Is this an island reversal in the open? So you guys had your eagle eyes on. It came off a key level. We ended up getting an open here, and it was probably the best trade of the day. Just kept selling and selling and selling and selling and selling, down 2.11%, and it closed on the low too. So closed on daily low. That's usually showing you that there might be further weakness behind that, and that rallies could be met by sell demand. The same was not true for Qs. Qs held really well. Tech stocks just holding up here. No weird transactions going through either on the big tech stocks, so that was interesting. But you can see here the Nasdaq tried to put in some selling, really failed to do anything spectacular. We're certainly not below the 15,322, but just remember there's almost no trade in this candle here. So if it does get underneath this level, I think it's going down back into like 15,050, and that will be a pretty decent little sell-off. So still an interesting level. Could be that the buyers are about to push through, but we'll know that if we make a new high and close above it. US 500 is something similar. I've just put here just to show you the real weakness in the volume. You can see there's almost no volume trade through this giant candle. So again, we get underneath 44.90, then that's really pointing towards weakness through the Nasdaq, weakness through the S&P, and weakness through the Russell continuing on. Bitcoin now, it's doing nothing. It's just literally sitting there, holding itself at the same area, coiling through. There's the Bitcoin ETF announcement. There's the delay. And I'm kind of looking for Bitcoin to weaken. I'd like it to go to 22 or even underneath 20. And I would say those areas there will probably be the lows for Bitcoin, or something around the lows for Bitcoin, moving into the next halving cycle, which we've discussed and we will continue to discuss on this channel. For the big news, it's ISM Services PMI, 10 a.m. New York time. The Bank of Canada, of course, rate statement coming out as well. And then we scroll down and we scroll through, and you can see here all of the information coming out this week. It's not that much until next week, which is, of course, the CPI numbers. So inflation numbers coming from the US, Wednesday, September 13th. That will be the most important bit of news. Just a quick reminder, if you're interested, we are only 17 days away from our Vegas conference. We do have some ex-Goldman Sachs, CMTs, and a whole bunch of specialists at certain technical indicators and, of course, positioning concepts. So it's going to be a great event. There's heaps of people coming, and I think we've got some of the best speakers around. So definitely check it out. Links in the description down below. And we've also announced a little bit of an extra. If you don't want to have the dinner and the other things just for cost reasons, then there is another option for you as well, which is just to attend the event, but not necessarily to attend all of the food and stuff. So if you're interested, you can check that out. Makes it a little bit cheaper, makes it a little bit more accommodating for you. So links in the description down below if you want to attend. Thanks so much, everybody. Thanks for subscribing. Smash the like button if you found value in today's video. And of course, good luck in the markets over the next couple of days. See you soon.